Hello, today's Monday, April 22nd, 2024, and I'm Jason Shapiro with Crowded Market Report. So today we saw a little rebound in the stock market, which I don't think we could call totally unexpected. Pretty oversold here. We have earnings of the most profitable companies in the history of the planet being released this week. Very hard to try and stay short in front of the earnings releases, in particular given the earnings that they've had in the last year to year and a half. We did have another flush down early in the morning after opening up, and it was like, oh, here we go again. And this time it trapped everyone, which again isn't too unusual. It does it 3-4 times. Everybody recognizes the pattern. They go with it this time, and that's the time they get whacked. At least that's how it happens for me when I try to day trade and chase stuff. So that's probably what happened again here. I thought, and this points to the idea of shorting, which I talk about a lot. Shorting the stock market is extremely difficult, and all we need to do is look at the correction that we had here last year from July till the end of October, which was a 10% correction. And it feels like, hey, if I could catch a 10% move down, you know, it's great alpha I can add to my portfolio. But 6 weeks into this, the top was here. 6 weeks into this, the market was barely down at all. And if you had shorted even the top, you had to give back 90% of those gains and be willing to sit on that the whole way in order to catch the rest of the move down, which is very difficult to do. Shorting is very difficult. And the truth is, over time, it doesn't work. And the return to risk on it is so bad over time that it's just always, not always, but other than a crash, which doesn't happen very often, it's a very, very difficult trade to do. And I don't suggest it for most people. If you're bearish or whatever, reduce longs. Being net short is over time just a horrible trade, and also develops really bad habits as well. Just a thought. Going back to in general today, I thought the most interesting thing was the fact that the metals, really got hit today. Silver was down almost 5.5%. Crude was down almost, gold was down almost 3%. And even crude was down. And yet, in the face of all that, the currencies that have traditionally been known as commodity currencies, meaning the Aussie and the Canadian dollar, were the two strongest currencies of the day. Aussie was up, Canadian was up, okay? And this is New Zealand. New Zealand, Australia, and Canadian were the only ones that are up. Now, I'm biased on this because I do have a position in the Canadian dollar here. But I thought it's interesting that with the commodities getting crushed, the commodity currencies actually were the strongest currencies out there. And we have massive short positioning in those currencies. Now, traditionally they go with the commodities. However, in the last few months, as gold and silver have ripped, those currencies have actually come down. So the correlations have somewhat broken down here. So it's hard to base them on that here. But here, here's the positioning in the Aussie, where you can see speculators are massively short. Here's the positioning in the Canada, where speculators are massively short, right? So trading the correlation thing is very difficult here, but trading the positioning thing is still valid, right? You can see the Canada's had a pretty big move up, even as the dollar index has gone nowhere, right? And I thought that was the most interesting thing today. The fact that these commodity currencies ripped in the face of commodities, and in particular metals, having horrible, horrible days. So just something to keep an eye on there based on the positioning and how the tape is starting to move in these things, okay? So there it is. I personally feel that the stock market has not seen its low for this move. But even if that is correct, it doesn't say anything about the path. It doesn't say anything about how much this thing can squeeze back up here before making a new low, if it's going to make the new low, right? Going to be very volatile this week with the earnings stuff. and we have the big, number on Friday that the Fed loves, apparently, and everybody loves to look at and say the Fed loves. So it's going to be volatile this week. And if you are looking, if you're trading from the short side, as always, when you're trading from the short side of the stock market, stay small. Be much smaller on the short side than you ever are on the long side, because there's upward drift in stocks. You're playing what over time is a losing game. Doesn't mean it can't work sometimes, but over time is not the greatest trade around, all right? So that's my thought. Happy to hear questions and comments as always. And please check us out on crowdedmarketreport.com. I think you'll find that there is a lot of value there. If you like these videos, there's 100 times more value on our Crowded Market Report, and it's been priced extremely affordably. All right, thank you, and we'll talk to you again tomorrow.